What's up, guys? It's Cash Flow Cart, and today I have a very exciting video planned. In this video, we are going to cover the stock I have added in 2025. It's one I'm going to continue to focus on adding throughout the remainder of this year, probably, and we're going to go over a few reasons why I like this stock so much. But, first off, quick little update. Like I mentioned in my last video, guys, I had been on a little bit of a break. We are getting back in the swing of things, just filming and getting this content pumped out for you guys, something I love to do, and it's very exciting. This past weekend, I visited my little sister at UK, the University of Kentucky. She turned 21, so it was pretty fun. Went out there with my family and her friends, and it was a great time. Pretty cool to see, just the culture and kind of bar scene at another college. Me being an IU student, sometimes I forget that there's a lot, a lot nicer stuff out there sometimes, but you won't get carried away on that. Kind of my plan this week, guys. I'm going to be home here Monday, Tuesday, and probably Wednesday. Trying to work on some stuff for the YouTube channel, as well as some stuff for my day job. Some very exciting stuff, very exciting things coming up. Okay, enough rambling. That was the life update. And now let's quickly look at today's performance of the portfolio. Guys, we are up $1,505 today in the dividend growth portfolio, bringing the total portfolio value to $68,785. This day change, pretty cool, being up 2.24%, while the S&P is down 1.41% on the day. Again, I don't want to get caught up in day-to-day changes or stuff like that, but it's a bit of a vanity metric. Definitely makes you feel good about yourself when you see kind of a bullish divergence between your own performance and the S&P 500. Okay, it can mean you're doing something right. Okay, again, that's kind of for vanity. It's not super important. We'll take a quick glance at the portfolio real fast, guys, and it will become very apparent what stock we have added. That is Pepsi, ticker PEP, guys. PepsiCo Incorporated. I have 21 shares now. It is coming in at my 8th largest position, so it has already overtaken T. Rowe Price Group. Market value of $3,246.81. And estimated income over the next 12-month period of $114, guys. Okay, this one pays in January, so it'll be 1, 4, 7, and then 10. Those are the quarters it pays on, and the current dividend yield on it is 3.65%, guys. Very exciting. Pretty good dividend yield for this one. Let's look at the chart really fast, kind of to see where I've added. I did go over this quickly in the last video, but we'll review it again before we get into fundamentals. So, like I said with Pepsi, in 2020, we saw this double top pattern on the chart. Obviously, there were some struggles with COVID. We see this huge sell-off. In hindsight, it probably would have been much more ideal to have cash on the sideline during this dip. But, you live and you learn. So we see this double top. I kind of get interested in this level as, kind of an entry for future reference. I go ahead and put on my chart $144 question mark. I'm watching this one as it starts to fall. We do get that dip below the 144. It breaks down kind of this previous set, support. And I go ahead and I add 21 shares at $144 and change. So there it is, guys. I saw my target price. I saw price action break below that number, and I went ahead and locked in, a starter position. Looking back, I am already up, I guess, $10 a share, so I guess that is nice. However, I would prefer this one to kind of stay down a little longer so I can build out the position a little more. You may find yourself asking, where did these funds come from? Okay, if you haven't been paying too close of attention to the channel, you guys know I did trim Apple again. I didn't liquidate it. I trimmed Apple again, 5 shares. I took them off at 233. It's now at 229, okay? As well as I trimmed 5 shares of Microsoft. Where is it? I took those shares off at 416. It's now at 434. Okay, so 2 trims in the tech sector, as well as some net new capital and reinvested dividends, have given me, the position in Pepsi. I've built it out. Okay, let's kind of breeze through my whys for this one. And first off, it's something we've been touching on for a long time, and that's going to kind of be the sale in consumer staples. Okay, we can sit here and we can talk about Ozempic, we can talk about politics, we can talk about the health department or any sort of external factors or news we kind of want to bring in. We can talk about. However, what's important for us to realize here is that there is a sale in the consumer staples sector. Okay, so does that make sense, guys? One way I kind of like to wrap my head around which sector is on sale relative to the overall market, the S&P 500 in this instance, is by using kind of a chart of S&P 500 sector performance, okay? And this is going to show us the performance across sectors from the standpoint of large cap stocks, okay? We can see here in the brown, consumer staples in 2023 as well as 2024, one of the worst performing sectors in the market. Okay, even in 2022, where consumer staples did outperform a lot of the market, it still had a negative, annual return. Okay, so with that being said, we've seen, 3 relatively bad years for this sector in a row, and now it's become, strikingly apparent to me that this is kind of where I need to be searching for deals as a long-term investor, trying to practice patience, okay? One thing I did write down, and one thing I do want to reemphasize to you guys is to kind of avoid the trap of instant diversification. Whether you're starting your dividend journey or whether you have a large lump sum of capital, whatever the case is, I really want you guys to focus on moving slowly in this game, realizing you're a long-term investor, and move very slowly with a lot of conviction and try to take, the best advantage of opportunities that you can, okay? Rather than saying, I'm shopping for stocks in every sector. You don't really have any sort of direction or plan with your money if that's the case. So my plan right now, take advantage of consumer staples. You guys have seen me do it. Trimmed a few tech guys and started this position in Pepsi. As well as, we've seen me continue to take advantage of Hershey. This one continues to fall, and I'm going to probably continue to add throughout 2025 to this one as well. Another consumer staple play. Okay, another thing I do want to visit, guys, is I try not to get too terribly caught up in, I try not to get too caught up in this thinking of, I need crazy diversification in my portfolio. I try to avoid that because in my mind, if I'm really going to specialize and put in time into this game, I'm going to have to take some stances. I'm going to have to take some relatively big positions rather than just kind of, having an array of small positions. At that point, to me, why am I even doing this game? If I'm going to have, 100 plus positions, why am I not just using like an S&P 500 ETF? No, I'm a dividend growth investor. I don't want to be, over diversified, trying to do everything. I want to have some conviction in my positions. With that being said, on the topic of diversification, I believe Pepsi is a very good stock to get diversification all in one stock. So let's see. Okay, here it is. This is what I was looking for. So, again, my point here is with Pepsi, I can reach diversification in my portfolio with the addition of just one stock. So, again, this one's very well diversified within its sector of consumer staples, guys. This was the page I was looking for, and this just kind of shows the variety of brands within Pepsi's portfolio. Okay, anywhere from water, Cheetos, Doritos. This is a snack and beverage company, guys. And I've done comparisons in the past where I've kind of tried to drive that home, comparing it to Coke, which more focuses on beverage. Okay, so Pepsi has a very large portfolio of products. Pretzels, popcorn, oatmeal. Starbucks, where you see this Starbucks here, is they own, where we go. So they own kind of the right to, right here, these bottles, okay? The bottled beverages, almond milk frappuccino, mocha flavored chilled coffee drink, kind of same thing here, okay? It's not like you go to Starbucks and Pepsi is benefiting from that. If you buy Starbucks at a gas station, grocery store, any of kind of these glass bottles, that is kind of what Pepsi owns from Starbucks. Does that make sense? Okay, so moving on, guys, we kind of touched on, Pepsi's broad diversification within the sector and how that does bring more diversification into my portfolio without needlessly adding stocks. Let's move on next to another reason why I'm so interested in this one. We're going to go over a few valuation metrics, a few I like to use. We will probably check out some dividend metrics as well as some track record stuff too. If you guys have been with the channel, I really like to use this metric right here, okay? Price to free cash flow on a forward basis. I like to use price to cash flow because, as a dividend growth investor, cash flow is what's important to me, okay? A company's free cash flow is essentially what they're going to be able to pay their dividend out of, okay? So they can use free cash flow for acquisitions. They can use it to stay on retained earnings. They can use it to reinvest in the company, or they can use it to pay dividends. So free cash flow is really the number I like to stress, for the style of investing I'm in, okay? So right now, their price to free cash flow on a forward basis is that 16.5, okay? We see here the sector median is 12.35. If we're just kind of comparing Pepsi's price to cash flow to the sector median, we might say it's overvalued. However, again, my school of thinking is to compare current data kind of back onto that same stock's 5-year average, okay? The reason why I do this rather than comparing, current data to kind of sector data is because at this point in the game, I understand that a stock like Pepsi is going to trade at kind of a value premium, okay? So because investors see Pepsi as like a value stock, a safer stock, something like that, or a blue chip, whatever we want to say, it's going to trade at kind of a premium, okay? Its valuation multiples are typically going to be higher than that of the sectors because it's kind of the big dog, for lack of a better term. So I understand that every stock is going to trade a little differently based on kind of, investor sentiment. So what I like to do is compare Pepsi's current data back onto its 5-year average, okay? Pepsi's 5-year average of price to free cash flow is 19.07, okay? That is, higher than its current valuation, which could represent, over a 13% undervaluation in Pepsi. Okay, that's kind of like, I'd say that's the main valuation metric I like to use to kind of drive my, conviction home. Obviously, I do kind of start with charts and kind of flip through my watch list that way. But, when I'm looking deeper into these companies, this is my favorite valuation metric. Again, we've talked about this before as well, but you can also use the dividend yield as a valuation metric, okay? I've seen a lot of other guys on YouTube do this, and, I don't always know how I feel about it, but I do think, it's a very easy way, it's a very binary way to tell me, as a dividend investor, is this thing undervalued or not? Okay, so I don't think it should be the only metric you use, but, we will look at it for Pepsi. Their current dividend yield is 3.57%. Okay, their 5-year average is 2.79%. Okay, what this tells me is buying Pepsi right now, as compared to, the average of 5 years, I'm getting 28.33% more, dividend income. A lot of times the way I'll reference it is I'm getting 28% more bang for my buck right now. Okay, so potential capital appreciation, upside appreciation, all of that aside, just from the dividend buy and hold forever standpoint, you're getting, more income with less right now in Pepsi. Okay, something I want to drive home. And then we will go ahead and touch on one more quick topic. And that topic is kind of going to be the dividend scorecard, or the track record of this one. Okay, guys, this has had dividend growth of 52 consecutive years. Much older than me. I would say this is one I would definitely place in the category of sleep well at night type of stock. Okay, Pepsi has a wide moat, a long track record. Definitely something I'm very interested in for the right price. Okay, and I kind of think that time is now. With this long of a track record, I am very impressed to see a 5-year dividend growth rate of over 7%. Okay, something we've kind of talked about before is you don't often see, a track record this long. You don't often see them have a very impressive 5-year growth rate. Again, this number is no guarantee of future growth. It's just kind of trailing data. But if we look at something like, Altria, for example, one with another long track record, 55 years, we see their 5-year track record is under 5%. Okay, does that make sense? So for me, Pepsi, it's kind of the best of both worlds in the stance that they have a long track record of 52 years, as well as, they've been pretty dedicated to growing that dividend on the past 5 years. Okay, let's see if we can look at one more to kind of better drive that home. Johnson & Johnson, another one, 62 years. Okay, it's right around that 5% level. So Pepsi is definitely one that I would say has the most aggressive growth rate for kind of these guys in this dividend king category. Okay, does that make sense? Another metric I like to look at on the dividend scorecard is going to be dividend safety, guys. I'm going to be looking here, same again, at the cash flow payout ratio, 58.63%. I'm not always looking for, a specific number on this. I do just like to glance at it and kind of get a sense of, okay, this is sustainable. All right, does that make sense? If we saw this with, a different type of stock, like, for instance, a tech stock, or even a healthcare guy where more capital is required for, research, development, acquisitions, it might be concerning to see the cash flow payout ratio this high. But with something like Pepsi, where their growth at this stage, has pretty much just done through acquiring new brands slowly and kind of continuing the course. I do like to see, a little bit higher of a free cash flow payout ratio. There is still some room for them to continue growing, their dividend. I like to see that, guys. So with all that being said, guys, Pepsi is going to be the stock I'm most focused on in 2025. I'm really excited to get you guys, a couple more updates. I know in the past I've done a video where I've kind of compared Coke and Pepsi stock. It's probably been over a year since that video came out. It would be one I would like to redo just so we could kind of, have a better understanding of some key differences there. But no, I'm proud to have this one in the portfolio and already have, I guess, a $10 a share profit. I'm excited to continue adding this one, and I'm excited for you guys to be along in this journey with me. This is Cashflow Cart. If you're not subscribed, please do so, and I will catch you in the next one, guys. Thank you.